Hello, Oak Bloke here, and we are going to cover SilverCorp. So this is one of my 2026 ideas, and we won't start at the bottom, we'll start at the top. More logical place to start, I would feel. And I released 8 ideas so far of my 2026 ideas. This one is going to be the ninth. So this is a Canada or US listed company, so it's not listed in the UK, but you can buy it from within an ISA, you can buy it from within a SIP, you can buy it from within a trading account, and most of the UK brokers allow you to buy it. Obviously, if you're tuning in from not from the UK and you're maybe a US or Canadian investor, then welcome as well. I do mainly cover the UK, but not wholly, and I have, I guess, spread my wings a little in the current year, where I look at the domestic options of the likes of Hochschild and Fresnillo, and kind of it's all quite pricey and quite expensive. And I think probably there's a little bit of home bias where Brits kind of say, "Oh yeah, silver's going up, so I'm going to buy Fresnillo." You know, the cliche is there. Um, Now there are some corners of the market that existed, and things like golden prospect metals that um, was on a 25% discount a few months ago, was trading at 42p. I think there's a prior video where I on YouTube I talked about golden prospect and said, well, if gold and silver continue to do well, this is incredibly well positioned, and it's up 250%. And I think it hit £1.03, and the NAV is, I think, £1.03. So I did sort of trim it back. I've still got it. I still got a lot of it actually, but I have trimmed it back and started buying other things. And SilverCorp is one of these things. So let's get into the detail of, well, why do I like this stock? So as you can see here, we've got a I seem to be doing a silver statues approach to silver stock ideas. So that's why we've got a Silver Corp. And as you can probably make out the ethnicity of that statue, this is a China. This is a China company, or a Chinese-based mine, or mines plural. So the thing I like about this is, first of all, I mean, they've got a very long track record. So this isn't a development mine where you are hoping that they will get to production, you're hoping that they'll be able to build the mine. I mean, these guys have been going, producing for over 20 years. So in those 20 years, they've generated or produced 100 million ounces of silver, 1.5 billion pounds of lead and zinc, and if you take an average of that, that's like 5 million ounces a year, every year for 20 years. I'm pretty happy with that. Like, if a company can do that 20 years in a row, I mean, I asked the question there, well, what's the risk in the 21st year? Compare that to companies that are kind of building mines and are starting mines and are, prospecting for material. It's completely, these guys are producers. I really personally like producers, being positioned into producers, because you don't know that you don't know how long this bull market in gold and silver will last. I mean, personally, I think it's going to last a good long while, and the reason I think that is because let's talk about gold quickly. Gold is being used and is being bought by many central banks, and the central banks are underpinning it. Even until very recently, the general market were just completely ignoring gold. Now, I've watched Bloomberg a little bit today. this morning, this afternoon, at lunchtime, and this evening. And every one of those three times when I switch Bloomberg on, gold, silver, every section, three separate times during the day. Now, I'm sure in between, like that's sort of, I don't know, 12 hours of programming. I'm sure they've talked about other things, but on every one of those three times that I tuned into Bloomberg, talking about gold, talking about silver. So I think there is now a flood of money that is starting to come into gold, which will be very supportive. But there's a flood of money that was going out of gold until very recently, at least in the West. The other thing that I think is also true is that the there is still a very much a jewelry market. There is still very much a market for precious metals. Moving on to silver, silver's been in a deficit for a while. Um, Solar is expanding, electronics is expanding, and I think the reality is that the silver market is very small. But compared to gold, I mean, the silver market hasn't moved that much. I mean, it's still the case that with 1 ounce of gold this evening, you can buy 80 ounces of silver. And if you kept doing that and you had very, very deep pockets, you had Olympic sized swimming pools worth of gold, um, you wouldn't be able to buy 80 ounces of silver times the number of ounces of gold, because the physical relationship of how many ounces that exist is more like 7 times. Okay, so it's a very much lower ratio than 80. So if you actually were swapping out gold for silver in any meaningful way, you would find that the price of silver very quickly went up because it's a much smaller market. Now, the difference is central banks do not buy silver. They do not put silver in their vaults. They don't store silver. And also, they are not settling trades through silver. Now, Brazil, India, all the BRICS countries, uh, they are. So, a couple of things are going on. I mean, tariffs and Trump and trade tariffs and all of the Liberation Day has driven a lot of countries. And today I was reading about how India and Brazil are now settling trades in gold, and are doing a free trade deal among themselves. The American approach to play hardball with its trading partners has caused all the all these countries that perhaps didn't have such close trading ties to really develop those, and that's true of Britain as well. Britain and India are in talks. There's a lot of bilateral. I know that Japan is extensively in talks. So the gold is very supportive of kind of almost like an alternative international reserve currency or trading currency. I mean, it's both a trading currency and a reserve currency. So people are removing dollars out of their vaults. Central bank, and when I say people, I mean banks. Central banks are basically getting rid of dollars and are replacing them with gold, but it's also becoming a method for settlement. But also that the Chinese are increasingly settling trades in renminbi as well. The point is that the Chinese do not have enough credibility for the renminbi to become a reserve currency, at least not now, at least not in 2025. So gold is kind of like the proxy now. Will at some point the Chinese say, well, guess what, guys? We're going to do a gold standard. We're going to tie the renminbi to the gold standard, to gold. I suspect it's going to happen at some point, and this is the reason that they are buying so much gold. They really are. I mean, if you look at the data, it's very impressive. But anyway, that's the backdrop. That's the reason that the ninth idea of the Outlook 20, picks for 26. I almost said 25 for 26, but it's not. I don't know how many there's going to be. So far, there's 8. Now there's 9. Don't know how many more I'm going to add. It's just called picks for 26, and there'll be however many I settle upon. Um, Maybe it'll be 26, maybe it'll be 13, maybe it'll be 9. Who knows? We'll see. Anyway, back to SilverCorp. So I make the point that there is a lot of nonsense out there and a lot of I say a lot. There are some mines have a certain reputation, as a saying attributed to Mark Twain, that a mine is a hole in the ground with a liar at the top. Now, I guess the point I'm making here is that the numbers don't lie. If you look at the cash generation, you look at the profit generation, and it's generated. I mean, you can see it here. It's generated profit. Green bars are profits. So apart from a couple of periods in 2015, periods in 2020, it's made profits consistently and throughout. The other thing that I really like, the red line here, AISC, all-in sustaining cost, pretty steady throughout. Okay, and also so some other, obviously silver price has varied quite a bit, and obviously this 30 here is sort of early 2025. So if you extrapolate this line, it's gone up there somewhere as I speak. So you can see as well cash flow. I like the fact that there's good levels of cash generation, free cash flow. Again, pretty much throughout every period, couple of off periods. Obviously, some of this will be down to investment, some of it will be down to the, silver went through a very low patch. I remember silver hitting $13 an ounce to sell. And at those sorts of prices, I mean, nobody is making money, because there's no physical way that you can get silver out of the ground for $13 per ounce. It's just not physically possible. It's not physically possible. Maybe you can steal it for less than $13, but you certainly can't mine it in any context that I've seen. And it's interesting because, I mean, I say $13 because that is actually the all-in sustaining cost for this. I mean, you can see, so it sort of says here that it's sort of 18. Now, I suppose one of the problems with presentation decks and so on is there's always kind of question marks that you have around where they've got the numbers from. Like, is this AISC including or excluding byproduct credits? I suspect it's including byproduct credits, but it'd be nice to sort of be able to see that, because anyway, I'm not going to start moaning about stuff, but anyway, so I mean, as I wrote this article, obviously the market's moved this evening, and in fact it's closed at 7.17, so it's, or in fact post close it's gone to 7.18, so it's gone slightly higher, still 7.18 in when I wrote this article, which is it's sort of early this morning pretty much, and I finalized it this evening, it was at 7.08. So all the numbers are sort of slightly 1% out because it's moved during the day. So there's 218 million shares in issue, and if you include the diluted, the sort of options and warrants, then you can get to 221 million. So that times that gets you to 1.55 billion. The NAV of the assets is 0.85 billion. So you're kind of looking at 0.7 billion of premium to its assets. So it's 1.8 times price to book. And this, by the way, are the assets that SilverCorp have. So they've got the Ying mine here, red dot, and that's kind of close to Shanghai. You've got this BYP mine, which is a gold mine, which is reopening. So that's one of the projects they're working on. You also have what's called the GC mine, which is down very near Hong Kong, actually. So it's a slightly different part of China, close to Hong Kong. And then separately, you've got El Domo, which is a purchase they made last year, and that is currently under development. We'll be talking more about that. They've got an early stage mine down here in southern Ecuador, which is a gold mine, called Condor, not to be confused with Condor Gold that Metals Exploration bought, that's in Nicaragua up here. But anyway, it's a different Condor, second Condor. And then separately as well, that it's got an investment into two mines, and again, these are early stage mining projects under permitting and feasibility studies, but they own 28% of Carangas and Silver Sand, and some fantastic numbers behind it. But that's kind of the and you can sort of see here, over 20 years, it's generated 600 million US dollars. It's generated and returned 200 million back to shareholders. Um, it's got a wodge of cash on its balance sheet. It's also got investments on its balance sheet, which is basically these Bolivian companies that it owns or part owns. And so, good credentials. 1.8 is actually, I mean, that might sound quite high to you, but it's not. It's actually quite low. You can see that here. If I compare it against my kicking, my main kicking object for high-priced silver and gold, Fresnillo, it's over three times cheaper. I mean, you can sort of 6.7 times. The share price is 6.7 times price to book. So I think you're spending something like, I think it's 24 billion pounds to buy all of Fresnillo, and it's sort of got assets below 4 billion, so 6.7 times anyway. Hochschild 4.1 times, and then what I've done is sort of in the in the interests of sort of showing a bit of fairness, and rather than selectively picking weak comparisons, I've also, there's other ideas that I've previously written about, Cerrado, so that one's not quite as cheap, but it's close. That's pretty good, 2.2 times, so close to how cheap SilverCorp is. Anglo-Asian, 4.3 times. Altin Gold, which is another pick for 26, so it's idea number 5. So that's a gold only. So this is sort of essentially, this is the second precious metals idea. Thor was an OB 25 for 25 idea from last year. So that is, I mean, incredibly actually, even though this has gone up, 360%, I think it is, it's still only on 2.2 times price book. Now, part of it is they're generating so much cash. I mean, they brought out their Q3 results today, and I looked at the numbers. I mean, and the numbers weren't like, they've expanded their production, or they've kind of, it wasn't as though there was sort of any great surprises, like upside surprises. But you just look at the amount of cash they've generated in the space of 3 months, and they're not getting taxed on it. I mean, it's like, that's why it's 2.2 times price book, is that it literally is just generating a whole load of money. And obviously some of that is coming back to shareholders. In fact, when they released their dividend, wasn't it, I think I'm right in saying it was something like a 12% yield that they announced, like, and the share price at the time, I can't remember the exact number, but maybe about sort of, the share price was maybe about 25p, and they sort of said, look guys, we're going to give, I think it's something like 0.75 pence every quarter, so it's 3 pence, which was a 12.5% yield, which obviously you think, wow, brilliant, 12.5%. That's higher than any other gold share. But of course, then the price went shooting up. So I think today, if you look at, in fact, let's just do that, because I don't like sort of sort of saying, oh, something costs this or gives you that, and it doesn't. So let's try and keep it accurate. So if we go and just quickly look at Thor, so we can see it's at 72p, and it's dividend. Oh, there we go. Good old. Yeah, look, it's 1.25 cents per quarter, so that's 5 cents a year. I don't know why it's saying that, because that's clearly garbage. So it's 5 cents a year. 5 cents a year is about 3.8p, something like that, 3.7p. So for it to be 12 pence, so it's 12%, it must have been 30p. In fact, yeah, it's coming back to me now. It was 30p or 32p at the time. So it's kind of doubled now. You know, it's still what, a 5% yield, which is still very decent. I mean, you know, let's go and kick my little kicking thing, but you know, like these guys are not even giving you 1%. Yeah. Uh, you know that their yield is less than 1%. Again, let's just double check that because it might not be accurate. But yeah, look, I mean, they've given 20 cents by the looks of things. So what's that? 15p. So you're getting 15p on something that's cost you £26.16, or 26.18 technically. So that's, you know, that's not even, well, that's 0.5%. So if they give that twice, then it's 1%, you know, then it's 1%. So anyway, back to this. Yeah, I suppose the point is that the other thing I'd point out is another OB25 for 25 idea is Kavango. Obviously it's pre-revenue, so, or at least it's, you know, there's no price earnings. I mean, it would be a price earnings of 0 or infinity, or you know, minus infinity or something, because they're not actually sort of earning, yeah, they're pre-revenue or pre-profit. But you know, certainly it's cheap on a price to book basis, and obviously that includes a lot of cash that they've raised. So they're obviously drilling and putting that money in the ground, expanding production. 50 tons per day. They're expecting to move that to 250 tons per day during 2026. But you can sort of see all of these. I mean, the other reason I chose these, and I haven't chosen any that are like Barrick Gold or, you know, Wheaton, that have mines in Canada, mines in the US, mines in Australia. Obviously, jurisdiction wise, that would be cheaper, or sorry, that would be theoretically safer. You know, yeah, you know, that you would sort of say, oh well, you know, I don't mind paying a price premium for something listed in Canada because Canada is such a safe jurisdiction. Now, obviously, as a negative, I mean, it takes a very long time to get anything permitted in Canada, so it's not all bed of roses or risk free. And obviously, it's quite a socialist government there, so you've got sort of, I suppose, the risk and danger, and obviously taxation rates generally are quite high in Canada. So I've never really sort of looked at that from a, you know, what does that mean for companies based in Canada? But look, I mean, all of these, like, these are the countries that those shares represent. So I mean, coming back again to this idea of, well, this is a stock where its mines are in China, one near Hong Kong, one near Beijing, or sorry, one near Shanghai rather. Whereas, you know, and then it's got sort of early stage stuff in Bolivia, and it's got a half-built mine in Ecuador. But, you know, really, like, is there a reason that this should be 3.5 times more when it's based there? Like, is Mexico really 3.5 times safer than China or Ecuador? I mean, you can obviously argue it both ways. You can sort of say, well, you know, Fresnillo is a very well-established company, and you know, Hochschild in Peru, oh, you know, very well-established company, and Peru's a very, you know, well-established. Well, Peru had flipping civil war because Hochschild had to suspend operations back in 2022, I think it was, or 2023. So, um, I just kind of look at this and think, well, in the last 20 years, there's been no riots in China, you know, that we know of anyway. Perhaps they just don't get reported, you know. But yeah, I just sort of, this thing about political risk. I mean, Brazil arguably could be said to be a safer place, and part of Hochschild is Brazil. Obviously, Cerrado is Argentina, so you could argue that one. Obviously, with Malay, maybe things are changing, things are better in Argentina, but what if the socialists get back into power, the Salinistas, as they call themselves? And then you've got Azerbaijan and Anglo-Asian. Well, I mean, you know, sort of Azerbaijan was at war with its neighbor until a year ago. Uh, you know, maybe that's all over now and they're all friends. And, you know, and some of its mines are in Nagorno-Karabakh, where you've essentially got kind of the equivalent of, I don't know, sort of, you know, if Newcastle was part of Scotland, um, you've got sort of like Nagorno-Karabakh is like Newcastle, where that's sort of part of Scotland, but it's sort of 100 miles inside England, and it's like, well, I at what point do the English kind of go to war and take back Newcastle because they say, oh, well, that's part of England, not part of Scotland. That's kind of what's going on over there, and its main mine, Demerley, that is in the middle of that war zone. So maybe they're all friends now and it's all blown over or whatever, or maybe it's not. But there is political risk, in these other shares and these other ideas. And Kazakhstan is Altin Gold, and next door to Russia. So the Russians went in and put down some riots not so long ago, a couple of years ago. Again, it didn't disrupt mining or production, but there's obviously question marks. Nigeria for Thor. Again, you could argue that one. Zimbabwe, Kavango. A lot of people have said to me, "Oh, I wouldn't invest in Kavango because it's in Zimbabwe." Well, but then I sort of said, "Well, look at all these." I think in my article I say, "Well, look at this list of companies. There's like 60 billion of market capitalization companies. Some of them are South Africa listed, some of them are Australia listed. I think, in fact, a lot of them are Australia listed, but like Zimplats and companies like this that operate in Zimbabwe and have done for years. So again, you can argue it, can't you? You can say, oh, well, it's too risky. It's too risky, but it hasn't been too risky for. I mean, even Caledonia. You look at Caledonia. Like these guys, what are they now? They're sort of Caledonia CMCL. These are based in Zimbabwe. So they've gone from zero to hero. I mean, I bought them back here when they were about £7, and I sort of, I I sold out at sort of, I think, about 15, which was great because I doubled, but I should have held on to them because they've doubled again. But I've sort of held them and hold them through the Baker Steel, which is again a Notebook 2024 idea. But these guys are what, 500 million, and they're based in Zimbabwe. So, like, people are not worried about Caledonia, but they are worried about Kavango, which is, to be fair, I mean, obviously Kavango is earlier stage. These guys are producers. Kavango's not yet a producer, so again, you can argue it. But in the same way, these guys are developing their Bilbo's mine and their, I think it's called Malopa mine, and there's the story isn't all that different, is my opinion. Anyway, I'm talking around SilverCorp, and really I'm here to tell you about SilverCorp. um, anyway, it's kind of many times cheaper than other shares or other gold, silver stocks, where you'd sort of say, well, like, should it really be cheaper, or is that just hidden value? So it stands up well against some and not so much against others. Again, price earnings trailing 12 times, and that's based upon the June, or at least what I've done is I've just taken the latest results, whatever they are. The latest results are 3 months to June. I've said, okay, 3 months to June, times it by 4 to get an annual number, and worked it out that way. So this 33 times was because Anglo Asian made, I think it was 4.5 net profit, I think it was, for the times it by 2, so I get to 9, and then the market cap is 200. No, in dollars, I think it's about 300 million. So that's kind of where I'm getting the 33 times from. So I've just done calculations to kind of get there, and and you can kind of see why I've got. I mean, I've done a self-imposed rule that I can't sort of suggest the same idea 2 years in a row. But here, you can see why I've included Alting Gold at 6.9 times. See, Hochschild actually was quite impressively low. I didn't expect it to be as low as that, but I suppose that's down to, well, I don't. I mean, what I've done actually is I've just blindly taken the Hochschild number from a data source. So whether it's correct, I haven't independently calculated that one. I calculated all the other ones, but not that one. So that did look very low to me. A little bit suspicious because I know they reported their Brazil mine is gone completely pear-shaped, and I think there's been some disruption or something going on there at the Mara Rosa project. It hasn't been a bed of roses or rosas for Mara Rosa. Anyway, let's move on to so these are the various different projects that SVM have. So 1, 2 that are producing. These I've kind of coloured green, but I think with retrospect I should have painted them kind of like a reddy colour because they are at permitting. They're not producers. So you've got 2 producers. Ying's the big one. GC's the little one. So it's big Ying and little GC in terms of production levels. And then, as I say, like they themselves talk about stable regulations, free profit distribution, close to sources of demand, close to solar panel manufacturers, close to smelters, not having to ship, concentrate to 10,000 miles to the smelter in China. They are in China, so there's kind of a couple of, I suppose, advantages to that. They've quadrupled their production over 20 years. So this is back in, there's no key to the years, but this is 2006, this is 2025. So they've kind of got from 2 to 8 million ounces of silver equivalent. And again, I'm lifting this from charts where I'm kind of then questioning these numbers, but I think this is gold. When they say silver equivalent, this is actually defined as it's this chart here, and you can sort of see it here. Silver equivalent AGEQ calculated by converting gold and gold and silver, so excluding base metals. So actually, I mean, it's 8.3 million ounces, but that's before all the billions of pounds of zinc and lead. Essentially that is again very impressive as far as I'm concerned. They've obviously managed to grow this and grow this very well. And you can sort of see this black splodge thing here of the AISC. The latest number, so 1212 here. The latest one is 1349, I think it is, for 1Q26. So the all-in sustaining cost has gone up, has increased, but I think a lot of this is just the extent of the byproduct credits rather than anything else. But 12, when you're selling something for 53, as you can this evening, although I am just trying to be completely transparent in this, that the byproduct credits is significant. So and also there is this, which is to say, sorry, I don't know if I put it in the article, but there is a sort of a deduction. It's this bit by here. So realized metal price examples. So the COMEX spot price, I think for the May the 27th was $33. Okay. The current SME, so I think this is Shanghai Metal Exchange SME, is $31. And they are getting 29. So they're sort of losing a little bit. Somebody's taking a little tickle from them every time they sell, and that's why excuse me. What I do later on, sorry, quick slurp. What I do later on is I actually just take off 10%. So today's silver price is 53, or I think maybe 52 when I was writing this, but I've actually deducted off 10%, so that's where you're getting 47.6 from, not 52 and a half or 53, whatever number it was. I forget the precise number. But the lead, they kind of, in their example, they said, well, the lead is the lead. In fact, it goes up in price for some bizarre reason. And then 10% on zinc as well. And I didn't know what to do about gold because obviously they don't talk about it, but I think I've taken 10% off gold as well, rightly or wrongly. Somebody takes a little $500 an ounce tickle off that as well in my calculations. So anyway, coming on to this and coming on to this part of the article. So yeah, the latest number is 1349, as I say here. The production in the latest results was 2 million. So 2 million times 4 is 8, not 8.3. But the prior period was 1.8 a year ago. So Q1 25 to Q1 26, production's up 11%. So, maybe that quarter is not you don't always get consistent quarters. Some, cold weather, hot weather, stuff like that, rainy weather. There's some sort of seasonal variations maybe, but I do think that's deeply impressive. And if I sort of give you I've typed it twice. If you actually sort of say, well, the gold to silver ratio is 80 times, well, it is today anyway. Then if you actually apply that 80 times, well, that times 80 is 1,070. So if you had a gold miner producing at an all-in sustaining cost of $1,070, you'd be all over it, wouldn't you? I mean, I would be all over it. I'm sure you would be all over it. So, that is kind of a deeply impressive number. Now, the point is, though, that buried away in the small print, well, it's 1349 because there's 1493 of deductions. So, in truth, it would be 2842 without, if somebody sort of all of a sudden said, well, I'm going to take 100% of the proceeds of your lead, your zinc, your gold. I mean, I don't know what the other is, but there's $1.14 of it, so there's a lot of something. Might be like trace metals, or I don't know. Don't know what that is, but anyway, whatever it is, it's worth something. So it it's helped along by all its byproduct credits essentially. Yeah, I mean, I think that's, like, using that number I'm pretty happy with, but I'm also happy to understand that the other things that it's mining are also sort of contributing a nice extra to, it's about a third of the profit. I guess you could look at it that way, couldn't you? That profits are increased by a third because of the byproducts at today's prices. So again, if you sort of took that number, multiplied it out by 80, you'd end up at an AISC of 2,274. Okay. In gold terms, which wouldn't be that great. I mean, it's, so if the zinc and the lead, if the grade started falling off a cliff, if the gold started falling off a cliff, the byproducts sort of start dwindling, that would be a problem here. But it's not happened yet. I mean, they have got lots and lots of, you can sort of see it here, they are expanding. So this is the forecast, 2026, 2027, 2028. And in the small print down here is based upon prices of $33 per ounce of silver and 3,300 per ounce of gold. So the numbers are hopelessly out of date, but even so, you can sort of see they're more or less going to, so they're currently in FY26. So in the next sort of 2.75 years, they're going to more or less double revenue. But it's more than double revenue. So what I do is I turn these charts into these numbers. So that 614 is that, 425 is that, and so on. 354 is that. And I take the small print numbers and kind of like, that's what the per pound or per ounce price is for them. So if we replace those with current prices, so what you'll see, like, this is the revenue number per year, okay, that you end up with about 100 million. It's 100 million this year, 130 million next year, and about 160 million, 140 million rather, sorry, the year after. So on the basis there's about 20% tax, you're kind of looking at an uplift post-tax of about 100 million a year based upon prices remaining at what they are today, if they remain at this level this year, next year, the year after. So, I mean, the upside of this is nowhere in the price, because actually, if you say, well, last year profits were 76 million, year before the profits were 30 or 29.6 million, which obviously on a 1.55 billion market cap, that divided by that, well, you're talking 20 times profits. So, I mean, that's okay. That's not fantastic. That's okay. But based upon that number, I mean, you're then getting at 8 times, so that sort of works out at 8 times profit. And obviously that's a revenue number. I'm not saying that divided by the 1.55, because that would be obviously the price to sales, which is about 3 times. No, what I'm saying is the estimated net profit for the current year looks to be around 8 to 9 times, and that's based upon the revenue last year, or the year up to 31st of March is the year end, versus the current year. It's going to sort of be about 50% higher revenue. And part of that is slightly higher production, and part of that is much higher prices. Okay. But, when you factor in, I mean, by 2028 and that revenue number, that price earnings, I mean, I don't sort of come out with a specific target, but I would sort of say, it's going to be down into the low single figures. I mean, 4 times, maybe 4 times, something like that. So it's quite hard to find cheaper than this, I think. I mean, if you go and look at, Wheaton, Fresnillo, etc., etc., etc. If you go and look at the ETF, SILG, I mean, that is at eye-watering levels as well. I mean, SILG is just, it's Wheaton and all of those. I mean, I don't know whether they publish price earnings, but that's sort of doubled over 1 year, and was it tripled over more than 1 year. And all it's doing is reflecting a basket of companies that have got price earnings into the 30s or 40s or even the 50s. Whereas this one is, I would say, based upon what I can see for the current year, is in the high single digits, and it's heading towards the low single digits, is kind of how I see the earnings. And you can sort of see it here, on an EV/EBITDA basis, it's dead cheap. On a price to earnings, adjusted earnings basis, it's dead cheap. You can see here 17.6 times. So this is on a sort of trailing. So this 20.3. They kind of, I suppose, I don't know what adjustments they're talking about here, but they sort of do some adjustments to get it to 17.6 times, whereas my calculation was 20.3 times. But yeah, price to operating cash flow, 9 times. So for every pound or every dollar that you invest into this, if you were investing into some of these, Endeavor's quite a famous, Pan American's quite famous. I mean, look, you're getting what, 8 times more cash flow per dollar invested. I mean, these are just substantially better metrics. So I think the other thing, and we're almost there with this presentation. The other thing to say is that they've done so much tunneling and drilling. I mean, this is the other thing to say. When I say extensive, I really do mean extensive. At its 2 China mines, it has done 150,000 meters of drilling per year for 21 years. And 46,000 meters of tunnels per year too. You can see it here, like, that plus that, divide that by the 21, okay, that plus that, divide by the 21. That's where I'm getting those meterages from. I mean, that's just an absolutely phenomenal. I mean, like, for the last 4 years, you can sort of see, they've literally been like just drilling and tunneling to like, well, just massively. So if you go and look at their reserves and so on, I mean they've obviously they like Emma up 11%, resources up set life of mine beyond 2038. So it's all looking good from a longevity point of view as well. I mean, China can carry on producing for many years to come is the point. Now moving to Ecuador and to the El Domo mine, this is under construction. It's all financed. They've done all the long lead items. It's going to be about probably a year from now that it starts commissioning, just over a year, maybe November. So you're looking at sort of first gold pour probably December, January, maybe February 27. So we're about a year away from this coming online. And this is, the El Domo. So it's copper gold, a little bit of zinc and silver. I mean, I sort of say there it's a doozy. Um, and that's kind of based upon, as I say, the forecasts are sort of based upon some really conservative numbers. The other thing I'd point out is just the percentage. Like, this has been one of my criticisms, is it's quite hard to find companies where the percentage of silver is the majority. That like SILG was a great example of this. I went through the top 10 and it was like it's probably about 60% gold, or 60%. No, in fact, it wasn't even 60% gold. Yeah, actually, if you only consider silver and gold, it was 60% gold, 40% silver on average. If you then included lead, zinc, and copper and other stuff, I mean, that percentage of what is actually silver was very low indeed. It was sort of like, it's called the silver ETF, but careful of what it says on the tin, because actually, if you go inside the tin, it's like sort of Tesco value caviar. You've got sort of maybe a bit of caviar flavoring, but you're not eating caviar. Uh, and neither should you think so if you're paying tuppence halfpenny for what should be a very expensive product, an exclusive product. You don't get something for nothing. So yeah, anyway, that 66%, and again, that's based upon the sort of historical $33 price. I think at today's $53 price, that percentage is a lot higher. It's going to be at about three quarters silver, and then sort of very, you can sort of see it here, these proportions. I mean, gold, I think, because gold is increasing, this percentage won't drop, it will increase, but the base metals proportion will today be less, partly because obviously zinc is down in price, lead is down in price, and silver and gold are up in price. So it's but you get the idea that, again, the ratio is very good. So I like the multi-jurisdiction. I like the reserves. I like the cash flow. I like the stability. I also like what I hear from the management. So I've included a couple of videos. I mean, obviously, I'm going to publish this article in the next couple of days, but uh, you can sort of find these videos quite easily on YouTube and make your own mind up. But I kind of they came across to me as quite sensible, feet on the ground type people, that are kind of just sort of logically working to grow the business, but not kind of do anything wacko, which is what you want, I think. And in terms of shareholder rewards, I mean, yes, there's a past history of that as well. If silver does climb any further, I mean, like, it's 53 this evening and it was 50 yesterday. So, I mean, the y- you know, is this going to go to 100? Is this going to go to 200? I mean, one thing I would say is, if you go back in history, I mean, I don't think I can go back because it says, oh, you've got to subscribe. But if you went back to when silver was $50, in real term money today, 50 is 200 today. So, I mean, whilst people say, oh, this is an all-time high, only in nominal terms. It's not an all-time high in real terms. We're still at 25%, 25, or maybe 27% of, in real terms, of where we've been before with silver. So could this go higher? It could, am I assuming it'll go higher? No. Uh, if it goes lower, because that's the other thing, will this implode? No, because it's got gold, it's got zinc, lead, it's got cash flow, and I think that's the other thing that I like about this is that it's a bit of an all-weather silver miner where if silver doesn't go nuts tomorrow, it's not going to fall off a cliff. It's sort of plods along, keeps doing what it's doing, and waits for better days for silver. Maybe there'll be a pullback, and then maybe there'll be another. Who knows? I mean, I think that's kind of to conclude the bit that I like. I like the second country of operation from a year from now. Also wonder whether, because Wheaton have and I don't know this is just speculation, but whether Wheaton might make a bid for SVM at some point, or somebody else might make a bid, because they're not a large company, but um, they have attractive assets at attractive valuation. So if somebody came along and said, we'll give you 40% premium. I mean, when you look at the shareholder register, there's quite a lot of smart money invested into this as well. Let's see if we can find that quickly for you. And those are the facilities, by the way. I mean, again, it's all sensible stuff. It's all got good ESG credentials as well. There's, just ticks boxes. But yeah, in terms of the shareholders, there we go. You've got, BlackRock, UBS, Citadel, Van Eck, Global X. I mean, you've got a number of ETFs in there, and you've got some sensible, the top 10 is some sensible names in there that you'll no doubt recognize, and institutions own about half of it, insiders own, well, say half, 42% insiders, and then you've got the sort of retail and high net worth. So yeah, just that probably concludes what I'm going to talk about today. Hope that's been useful to you. I hope that's obviously none of this is investment advice. This, you make your own investment decisions, but this article will be published in the next couple of days on theoakbloke.substack.com. And that's all from me. Cheerio for now. Cheerio.